And people are having to make choices. Do I eat? Do I take my medicine? Do I buy gas for the car? Do I buy, it's killing them. Inflation is a killer. And you've got to understand that. You've got to understand that, and you've got to protect and hedge against it. Hey guys, welcome back to the Make More podcast. I'm Matt Heslin. I'm your host. Good to be with you. We're taping here on a Saturday morning. It's a beautiful day in Southern California. I'm glad you're with us. I want to jump into a topic that's been getting a lot of direct messages toward me and family and friends asking me about, and that's inflation. The topic of inflation is critical that we talk about it and plan for it so that it doesn't erode the value of your assets. If you're not aware of what the word inflation actually means, it's the continually growing of prices in an economy. Prices of labor, prices of groceries, prices of gas. All of us in America now have seen a lot of inflation, growth in prices. And what that has is it has an effect of essentially acting as a tax on you. Inflation acts as a tax. So think of it as a tax that's reducing your income. Inflation over a period of time has a way of wrecking countries and economies. And almost all economies that have faltered have gone through massive inflation. So think of inflation as the acceleration of prices of goods and services that you buy: gasoline, healthcare, insurance, food, water, clothing, you name it. We're seeing all those prices rising in America today. And that is, by definition, inflation. It's too much money in the economy chasing too few products. So think about it this way. When you go to buy a coat that you covet, that you really want, but you know everybody else wants it, what happens to the price of it when there's only 10 of them in the market and 2,000 people want it? The price goes up. Well, that's inflation. Right there, that's price inflation. The same thing happens with wages. As price inflation goes up in the market, wages have to go up so people can live. And so that's wage inflation. So now you've got price inflation and you've got wage inflation. The inflation factor has a crippling effect on the economy. It also has a crippling effect on the ability to export goods and services, because as our prices rise here at home, it takes foreigners from South Korea or Germany or wherever that are buying our exports more money. So they got to pay more money for our goods and services, which they're not going to do. So it has the effect of killing both the economy and killing exports. So what I want you to think about as inflation as a tax on goods and services and the inability to maintain your wealth at a consistent level because it acts as a tax on you. So today, what I want to do is talk about a solution, one solution of many that exists. We've talked about real estate as a great inflation hedge. But today I want to focus on gold, because gold is one that you can act on today. Gold is one that you can not only act on today, but that you can have as a store of value. It acts as a hedge against inflation. So essentially, gold can act as a hedge against inflation by the fact that it goes up with inflation. So as the inflation of prices in the economy rise, the price of gold rises with it. So what I wanted to do was just share with you today that, in the last, since 2020, the inflation rates, the prices of inflation, the general price increases in the economy was like 1.2% in 2020. It was like 4% in 2021. It was 8% in 2022. And it was like 13% last year. Cumulatively, we're talking about, a very large increase in value. But gold has gone from assuming the 2020 price of $1,735 to $2,400. That's a 48% increase in gold prices. And if you think about that, you say, well, if I had stored gold, then the erosion of my purchasing power would have happened, because I could now trade those gold coins in for essentially $2,400. And I want to show you just on camera. This is one gold coin. This is a 1 ounce gold coin. This is a Philharmonic, which means it's European based, and it can be bought and sold anywhere. It's 99.9% pure gold, and just a tube of these is $50,000. So when you think about it, you can store a lot of value, and this will go up and has gone up. When I bought it, these were at like $1,800 an ounce. And now they're $2,400 an ounce. So it's a great way to store and hedge against inflation, and it's a great way to maintain your purchasing power. And then remember, the other thing gold has the advantage of is that when currencies fail, and inevitably, as you heard Joey Santoro talk about on one of the podcasts, every currency has ultimately failed. And our currency at some point will fail. You're going to want to have gold as a commodity to hedge against inflation and to act as a currency so you can buy goods and services. Now, the other day, my daughter asked me a question. She said, Dad, with my new mortgage and my insurance and my car payment and all this stuff and the formula of saving 10%, how can I afford to buy even one coin? I mean, well, the good news about gold is that it can be bought in different weights. So 1 ounce, one of these coins is $2,500 or $2,400 an ounce. But you can buy them in half ounce, which would make it $1,200. You can buy a quarter ounce, which would make it $600. You can buy it in a tenth of an ounce, which is $240. So everybody can get in gold. You just start at a lower purity level of gold, a lower coin denomination. Start at a 1/10 of an ounce of gold, and then build up to, a quarter of an ounce of gold, and then a half an ounce of gold, and then a full ounce of gold. And when you have that gold, you'll know that you're protected against inflation to a certain degree. Now, the relationship between gold and inflation is not a pure one-to-one relationship. In the 1970s, we had massive inflation. Gold did phenomenal, and everybody who held gold did real well. Those who held on to dollars did real poor, because remember, the purchasing power of that currency is getting diminished over time with inflation. So the U.S. dollar will diminish in value over time. Think about today, how much it costs to go to the gas station. In 2020, it was $2 here in California. It was $2 or $3 a gallon. Now we're up to almost $6 a gallon. And people are having to make choices. Do I eat? Do I take my medicine? Do I buy gas for the car? Do I buy, it's killing them. Inflation is a killer. And you've got to understand that. You've got to understand that. You've got to protect and hedge against it, which is why I'm telling you to start, if you've got very nominal means, start with a tenth of an ounce of gold, or 2/10 or 3/10, whatever you can afford. That'd be $240 an ounce. So you can stock up on gold, buy $1,000 worth, 5 coins at a tenth of an ounce. So what I'm trying to communicate to you is that inflation is a tax on your income. It's a tax on your wealth. It's an eroder and killer of exports. It kills the economy. But nonetheless, keeping in mind that gold is what we're going to focus on today, I want to take some time to explain why gold is the commodity of choice. There's many commodities. You could buy silver, you could buy platinum, you could buy gold, you could buy, a whole bunch of different commodities. But gold is the tried and true store of value worldwide. And what do I mean by that? What I mean is, when you go to Europe, or you go to Asia, or you go to South Africa, or you go anywhere in the world, everybody has gold in their vaults as the government. And every government, right now, China and Russia are buying as much gold as they can, because they know if they want to be the reserve currency of the world, which is what the United States is now, everybody accepts dollars. So we're the reserve currency of the world. If Russia and China want to be the next reserve currency of the world because they see the U.S. dollar just tanking, they need gold to stand behind their currency. And that's what we used to be. The United States used to have, before Richard Nixon got us off the gold standard, there was literally gold backing every single paper dollar in circulation. And then he decoupled it, and there was no longer anything standing behind the dollar except the good faith and credit of the United States government. Well, what's that worth? So gold is a medium that everybody in the world accepts, both investors and governments. And investors like it especially because it has a calming effect. When the beta of a stock, which is kind of how it trades relative to the trading volume of the stock market, is jumping around, gold is a great hedge. Gold acts as a hedge against that uncertainty. So one of the things I want to talk about is, the physical gold here that I have in my hand, 1 ounce, $2,400. I want to talk about that versus owning a gold stock or a gold ETF, exchange traded fund, or a gold mutual fund. I'm not against those investments necessarily. What I do know is if back as in 1933 when FDR forbid by the executive order anybody from getting their hands on their own gold out of their own banks, if that happens again, you're stuck with nothing. You've got a currency that's worth nothing, and you can't get your gold. So I'm not trying to sound paranoid, but if you're going to buy gold, I recommend, this is just my recommendation, buy the hard coins. You can get a safe at home, bury the safe, and nobody's going to get to it. Nobody's going to know you have it, especially the government. And that's really important because when you buy a gold ETF or a gold stock or a gold mutual fund, you're buying the mining companies. You're buying the stocks and the ownership in the company that mines the gold. If you have a crisis and you need to get to the gold, they're not going to give you any gold. That's not what they do. That you don't own any gold. Now there's some other variations that you can get physical gold stored in different places, and that's fine. But can you get it out in an emergency? That's the point. That's why I like having physical gold in my vault, because I know that I can keep my family going for a very long period of time. And it's a medium of exchange. If we have to get out of the country, I can put it in a bag and we're gone. So keep in mind that owning, stocks of gold companies, ETFs of gold companies, mutual funds of gold companies is not the same thing as owning physical gold. You need the physical gold. And I was just saying, put 10% of your wealth in there. So we're talking about right now, taking 10% of your income, as we talked about on our last podcasts, taking 10% of your income and putting it away. We'll take 10% of that 10%, put it in gold. So if you're going to put away $2,400 in savings, take one $240 coin and put it in your vault. And you got it. So it's really important that you understand the difference between a gold ETF, a gold mutual fund, or a gold stock, which you have no right to any physical gold, and owning physical gold. So let's talk about now, how do you buy physical gold, right? Because that's how do you get started? Who do you trust? So I use a company called Monex, M-O-N-E-X, based in Newport Beach, California. There's many, many others, but there's really certain things you've got to look out for. First, when you're buying gold, you need a reputable dealer. Someone who's been in business a long time, has a great reputation, and somebody you can trust. And that typically is done through research and done through word of mouth from friends and family and other investors. So you can always use Monex. That's who I use, monex.com. You're going to want to check the spreads because there's typically a bid ask or a buy, sell, bid, otherwise known as bid, ask, bid, I'm buying, ask, I'm selling, spread. And you want to make sure that it's a reasonable spread. Every dealer is going to charge a spread, but you want to make sure that that spread is reasonable. When you're buying a stock, there's typically a brokerage commission. Well, it's kind of the same theory, right? This isn't a commission per se, it's a markup. And the dealer makes a markup on both the buy and the sell. You just want to make sure that's reasonable. You want to make sure that they're a credible dealer and make sure that everybody that you're dealing with, you're building a relationship with. My guy calls me all the time, tries to get me to buy more gold, and I've got enough. So I recommend physical gold, not the ETFs, not the stock of mining companies, and not the mutual funds, but physical gold. One of the challenges of buying physical gold is the integrity of the dealer. You've got to make sure that you know who you're dealing with. I told you about Monex, but it's important that whoever you're dealing with is straight up honest, fair and reasonable in their fees, and don't have a history of criminality. And those are the pitfalls, because a lot of these precious metal dealers are, shall we say, slimy. So make sure you pick them carefully and make sure you've got a good, solid company that you're buying and dealing with, because they're going to be the ones that are going to buy it back from you, and you want to make sure that they're going to treat you well. So make sure that has something in your repertoire. Okay, so let's talk a little bit more about asset protection. So we talked about inflation today. We've talked about why gold is the preferred precious metal to protect you against inflation. But let's talk about diversification, because we've talked about owning stocks. We've talked about owning real estate. We've talked about owning cryptocurrency. Now we're talking about owning gold. It's a really important strategy to diversify yourself against all things inflationary. So important enough to say, if you've got crypto, good for you. I'm a believer in diversification. I believe there's a place for crypto, but I believe there's a bigger place for gold. And then let's talk about silver for a second. Silver, if you buy silver, you're buying it at about $28 an ounce. So as we just said, 1 ounce of gold, $2,400. 1 ounce of silver, $28. So you can imagine, if you want to buy one, let's call it one $2,000 coin, $2,400 coin of gold, and you want to buy $2,400 of silver, I mean, the box of silver weighs so much you can barely lift it. So it's not practical for transporting, but silver is very useful when it comes to exchange, medium of exchange, acting as a currency, even more so than gold, because silver is much less price per ounce, and you can buy a loaf of bread and eggs and cheese and for $28 and give them one silver coin. But if you give them 1 ounce of gold, you're giving them $2,400. How's he going to give you, your money back? So silver acts as a much better medium of exchange in times of trouble. Gold itself is a much better sort of value of wealth, because you can take more wealth and store it in gold in a much smaller container than the box of silver like that, because it's so much less per ounce. You need a lot more to make $2,800. So right now, we've really gotten ourselves in a good position. We're looking at, our savings plan that we've talked about. We've talked about, diversification, how important that is. We've talked about buying homes and trying to start early, getting into the house owning, renting, flipping market. We've talked about gold and silver. So by now you should be feeling relatively solid that you've got a reserve of knowledge to start investing responsibly. But we've got a lot of good, solid advice for you to preserve your wealth, to enhance your wealth, to protect against inflation. And by the way, this inflation is not going away. It's just not. We're in deep trouble, because realistically, the government is funding 2 wars, and we're printing money we don't have. And so we're sending weapons and money over to the Ukraine, and we're sending it over to the Israelis. We're funding 2 wars we can't afford. And what does that mean? That means the government's going to have to print more money. And so the more you print of money, the less valuable it becomes. It starts depreciating in value. So the inflation that we've talked about up until now is one thing. But this notion that people are talking about the Fed's going to lower interest rates, it can't happen, because they've got too much inflation. They're funding too many wars. And they've got too many obligations of the federal government they can't afford. So they're just printing more dollars. And that's why Russia and China are buying gold, because they know at some point the dollar could very easily collapse. And that's why I recommend highly that you get a lot of gold. I'm putting more gold into my vault on a weekly basis. And I think it's worthwhile for you to be doing the same thing. So I hope by now you've got a strong repertoire of different strategies and different utilitarian commodities to make sure that you're protected against, inflation. I hope you've got a strong feeling and a strong understanding of each one. It's important that you do your own research, though, and it's important that you talk to a financial advisor. I can give you all the things that have worked for me, but they may or may not be for you. So it's important that you get your own advice and come back and put your plan together and with a financial advisor and then go to work. So I hope this was helpful. Hopefully you guys have got a great weekend ahead, and we'll look forward to seeing you next time. Take care.